Good morning, America. Hubert Johnson here with Guardian Tax Law and Taxes Made Easy on the Smart Money Channel TV. We've got a lot to share today, and I'm going to try to get through it quickly as I really do want to spend the bulk of the time talking about small businesses. There's so much to talk about directly impacting small businesses. Again, there's a plethora of information on irs.gov. I'm going to walk through it, make it, try to explain it as best we can as we go through this. But I don't want to get bogged down into too many details because there is a lot of information. So when you have specific questions, take these questions to a CPA, a corporate attorney. You can always call us and get your questions answered. And that's really my goal here, is to broaden your horizons, open these topics up so that when you are dealing with this, look, we can call and get some expert advice. We'll be right back. Welcome back, everybody. We've got a lot to cover, so I'm going to try to jump right through it. First article I'm going to share. It's kind of funny. It's about the Columbia protests, and again, doesn't it's just so ironic. So I'm not going to touch on it. If you're not aware, they've been protesting the Gaza war. They've verbally and or physically accosted Jewish students and or professors and staff, and essentially the Jewish. If you're Jewish, you have been told to essentially finish the semester remotely, go home. It's not safe for you on campus anymore. Which is again, that's a huge tragedy, and they're screaming death to all Jews, all kinds of other crazy things, basically advocating for the genocide of Jews. Whether or not you're sympathetic with the plight of Palestinians, going in and breaking the law, breaking all the university rules, and then threatening other people is not the way to protest. So they went in and they took over this main hall, took 3 of the night staff there hostage, and then broke out windows, were committing vandalism, etc. I mean, these people didn't have a plan to save their lives. And then they realized, oh no, we need food. But then the police showed up and they weren't letting DoorDash or Grubhub deliver food to them because they were breaking the law. And so the main representative here came out and she had a list of demands. And one of them is, please bring us food, which again, people scoffed and laughed at. And here's the crazy thing. And this is just what I want to highlight. You can't really hide when you show your face. That's why a lot of them have been wearing masks. But she's a paid instructor and PhD candidate at Columbia. So where's she getting the money from? Columbia is paying her. And to study what? To study theories of the imagination and poetry as interpreted through a Marxian lens. So she's studying Marxist ideology at this university, and they wonder why, when they have staff, paid staff, and again, there's a lot of staff involved in these protests, they're wondering why they're getting these huge problems. And one of someone had already pointed out what happened in the 70s when they had all the protests at universities is a lot of the protesters later on, became breeding grounds for terrorism. And it was a homegrown terrorism. Allowing this stuff to happen on our universities, again, not only is this degree and PhD absolutely useless and very counterproductive, Marxism has killed more people than anything else in the last 100 years. 100 plus, because the Russian Revolution was more than 110 years. So again, it's very, very scary to think of this is what's happening on our college campuses. But I'm gonna just want to touch on this. That kind of made me shake my head. No, he's not making this up. But we're gonna jump into some tax fraud cases. So this is what not to do. This is someone he didn't evade paying his taxes. He defrauded the government by lying on his tax returns. So this again, he owned his own business. Excuse me. Claimed losses every single year, and I've had clients do this. They went in and they falsified their records, and then they claimed losses every single year. And when it's obvious, and it becomes obvious, if you do it too many years, the IRS can come in and say, okay, you've never shown a profit. One, we're going to audit your books. You're asking for an audit. Two, they can label your company as a hobby, because if you're not making any money, you're obviously not doing it, running it for profit. And yeah, again, so they understand the first few years of a business, things go up and down. You have profits, you have losses, but they expect to see things go up and down. So this gentleman decided to, and this is what's alleged, he bought $10 million in gold and silver bars for himself with unreported income. So he claimed it as business expenses and took the actual cash and loaded up on gold and silver for himself. So this 78-year-old owner of a plumbing and heating company is now facing going to jail. So 4 counts of filing false tax returns. So don't lie on your tax returns. I know that there's a lot of, as taxes potentially could go up quite a bit, and it's expensive. I looked at my own taxes. I'm paying 30% in taxes, and that's low. And I'm trying to stay right below the next increase in taxes, or I'm going to be end up paying 40% in taxes. I have a wife and kids. I've got 5 kids. Some of them adults that we're still helping out, but it adds up. It becomes expensive out there. But do it the right way. Follow the rules, because it's not worth it. Here's another example of someone who, it's called the Bitcoin Jesus. Someone that's how he was known, selling and promoting Bitcoin. So he was an early investor, sold about, and there's a couple articles I read on this, but this main one, Reuters, is a little more thorough. Sold about $240 million in Bitcoin. But when he sold it, he wasn't a U.S. resident. And the government is still saying you owe us $48 million in taxes. Why? So again, this is mail fraud and tax evasion. So they're claiming that he used leading tax professionals, and it's claiming that he was always intended to fully comply with U.S. tax obligations. And they're going to contest this, but they're claiming that in 2014 he renounced U.S. citizenship, became a citizen of these small islands. Again, this is a clear example of people with assets leaving the United States to avoid this crazy taxation. Again, the more we raise rates, the more we're going to see people leave. And when these laws are passed, people are going to leave before the laws go into effect. So under current U.S. law, when someone gives up their citizenship, their property is being treated as having sold for its fair market value the day before they renounce their citizenship in a constructive sale. They say, okay, you want to leave? That's fine. You have the right to leave and go become a citizen of another state, but we're going to treat all of your assets as sold. And under this rule, this is where they're coming at him for the $48 million in taxes, unpaid taxes. So he hired a law firm, and they're claiming that he provided them false or misleading information. So again, this is the IRS side of the story. We don't have his side of the story. But again, it's when you're trying to leave the country, and this goes back to 2017. If you don't think the IRS knows what's going on with Bitcoin, other virtual currencies, they do. They absolutely do. So this is not a place to hide money, shove money, and try to avoid paying taxes. So again, just want to highlight those things not to do. It's a real thing where people get charged with tax evasion, and it's not always in the millions of dollars. We've talked about cases where it was 100,000. And for me, that's almost unheard of. But what did he do? He did everything wrong. He didn't comply. He fought against it. And there's a difference between fighting against the system, which is what I do every day, but you have to use their rules. And going outside the lines, coloring outside the lines, trying to do your own thing and fight the system by breaking the law. That's where you get in serious trouble. So there are a few articles on this topic. Treasury Secretary Janet Yellen, that was before Congress, before the House Ways and Means Committee happened yesterday, April 30th. And of course, there's going to be news articles about it. So Yellen is there defending President Biden and his administration. So, and this is the thing, Treasury Secretary Janet Yellen, she's supposed to be neutral. She's not. Clearly not. And her whole, maybe she didn't hear what was announced last week, which was all over the news, all over the place. There are a couple things that she was talking about. First of all, she was defending President Biden is negotiating a tax increase globally on corporations, a minimum effective tax rate of 15%. Now, this goes to the G20. It goes to, look, it's better. We need to make corporations pay their fair share so we can then take that money and help out the poorest in society. And so the idea is that how do we prevent cases like China from just running amok, because they're not going to go along with this, and many other countries, India, and there's plenty in the world that isn't part of this. So the answer to that is to, when they try to sell their goods to the United States, impose a tax on them. But the problem is that means China can still run amok and sell to the rest of the world without these onerous taxes. And again, there's plenty of ways around the rules for those that don't want to play along, and there's plenty of countries that don't play along. Also, constitutionally, the power of the purse, the power to raise and determine taxes, belongs exclusively with Congress, not the executive branch. So he's out there negotiating this with the hope that when the Democrats take over the House, again, and if they control the House and the Senate, they can pass these laws, and then they'd have to go in and fight them. And so it's a form of globalism. But at the same time, there are quite a few other articles talking about this as well. This article from Deseret News was a little bit more thorough. But one of the things that was also talked about is that she claims, they're fighting over whether or not the Trump-era tax cuts benefited the middle class or not. So she claims, and she's stuck with Joe Biden's claim, that nobody earning under $400,000 would see their taxes go up. Well, if you repeal the tax Trump cuts, and we've gone through the details on that, that is exactly what's going to happen. And so, again, either she's not informed as to what they're actually doing, but we're going to move on to the next article and jump into our main topic when we come back after the break. Hubert Johnson here. Thank you for sticking with us. I've got a couple articles that I want to touch on that deal directly with the economy. I'm going to share this next one as well. This one is from the Epic Times. So, do we want home efficiency? Yes. Do we want things to be better for the future? Yes. But all too often, adding prices and adding, increasing the cost of homes is not what we need right now. So again, new climate rules, according to industry groups, are claiming that it would add $31,000 to the price of a new home. Usually that goes up with inflation. It goes up with time. And there's an argument. So they've already passed this rule, and it's being contested. So it's set to go in effect, I believe, in May of this year. So it doesn't have a lot of time before it goes into effect, May 28th, 2024. So this is for all new builds, that you have to have these new standards in place, and they're claiming it's a relatively modest increase. However, it drives up the average cost of homes, by an average of $30,000. And the Biden administration is arguing that over time, the savings in energy will make up for the increased cost. And that over time might be 20, 30 years. The homeowner associations that are fighting this will say it will take over 48 years to recoup the lower energy bills due to ongoing inflation, the cost of money over time. $31,000 today will not be worth the same in 20, 30 years. It's you're paying a big chunk up front. And the way that most people are getting mortgages, so they're paying interest on that, as well as losing value of their money over time due to inflation. And so they break out some numbers here. The average home in Kansas City, Missouri, which they look at, is $406,503. You add $31,000, and what it does is it drives people out of the market. So an estimated every $1,000 you make a home more expensive. That's 950 families priced out of purchasing a home. And it just drives the overall cost if you include inflation. And they even say that an energy cost of $657 a year. The cost to finance these over time would be $1,100 a year, costing them $447 more than they were saving. So it just, and especially when you use rosy numbers, whenever you make things more expensive, you make them harder to purchase. And today we have a homeless issue across the country. Every major city has a homeless issue today. And it's here in my town here in Tucson. In California, it's really bad. Why are we making housing more expensive when we already have a crisis? We need politicians that will look at the current situation and actually help people get off the street. There's drug problems, there's other problems with it, but there's plenty of working families that have been put on the streets. Instead of taking care of people, we're making it harder for the average family to survive. And that's for energy savings over 30 plus years. Who knows what the market's going to do? This is really pie in the sky thinking that if we make things so much more expensive in the short term, that things will be paid off, over 30, 40 years. It kind of boggles the mind, and it's very possible they'll end up paying more, and it just makes things more expensive. So this is why I think government comes and creates a lot more problems than issues. Last article I'm going to share before we jump into our main topic is, again, talking about the economy, overall economy, weaker growth and higher inflation. Why did everybody get it wrong? The main point of this, and it goes into a lot of the numbers, this is why I like the Epic Times articles, is that they do have a lot of facts. They have a lot of, they don't just claim something, they go through and lay out the facts to it. So it's talking about consumer spending and a decline in the personal savings ratio. Why are people not saving as much? Because they're struggling to meet their bills. And you also have poor exports. So this is, people aren't spending as much. You have less savings because everything's more expensive. And due to inflation and the struggles here we have with the dollar, exports are going down as well. So, and those are all bad numbers. What is propping up the economy? Government spending. So government spending continues to rise, even though at a slower pace from the COVID funding. The idea is to give it's like a sugar high. When COVID happened, there was a lot of problems, and so they threw all kinds of money at the government. Rightly or wrongly, I don't agree with everything that was done. I think there was massive waste the way they did it, and it's really created a lot of distortions the way coming back from COVID was handled. But that was the argument for doing the COVID spending initially. Now we've come down off that high. We've seen all the effects and inflationary measures, a bunch of other issues facing the economy create a lot of distortions in the housing market, the supply chain. And now, what is the point of consistently taking that, drinking that instead of sugar, maybe you're drinking an energy drink. We're consistently to drink an energy drink by massive overspending, government overspending, which is outpacing any increase in revenues. And the whole point of this is that's what's making the economy look much better than it actually is. That it's not, the real numbers are very unhealthy. Public debt is higher than ever. And they can show this by higher inflation and weaker growth because it is not true growth. It's not a true indication of increased productivity, people working, wages going up, etc. Instead of people losing, suffering wage losses due to inflation. So again, it gets more of the details of this, but again, just hammering home at this idea that the government, and this goes into Keynesian economics versus, I can't think of the other guy's name, traditional supply side economics. Keynesian economics is a more liberal way of looking at things. And it argues that, look, the government can just spend, and goose the economy and keep things going up. The problem is that in the short term, yes. In the long term, all it does is distort the economy. So getting back to our main topic, small businesses, and this is important because it is a tough time for small businesses. It is absolutely a tough time. I talk to people every single day that are struggling, and I'm just going to take some time to talk about what I'm seeing and what's happening in the economy. Small businesses are closing across the country. Happens normally. You always have, those that are struggling, those that are thriving, but I'm not seeing, and I see the problem cases, but it's not your typical, hey, the economy changed, we just didn't keep up with the times, or things moved, someone died, or, it was mismanaged. I'm seeing a lot of issues with mismanagement of the economy happening. One guy, he had a restaurant, and they legalized marijuana, and there's a marijuana distribution, store not far from his restaurant. And then he said, now he's got people all around. It's really taken the area and declined it because now everybody comes in, they're all high. Or a lot of people, it's just not the young folks. We have older people too, they're all high. Nobody wants to work. It drives away people, your average person that doesn't want to go into a place or a restaurant that smells like pot. And especially when you have kids, I've absolutely avoided places myself that smell like pot. And if you want to smoke in your own home, do that privately, whatever, that's up to you. But I can't tell you how many times we go to the park and we smell it. And, it's secondhand. Smoke is a real thing. It doesn't just exist for cigarettes. But inflation, the cost of goods is hurting businesses all across the country. Now, a lot of people took out SBA loans. That's really what I want to talk about. So we've talked about setting up your business. Your business is open and operating. And there's a host of issues you need to look at and be concerned with. But I want to really kind of hammer on SBA loans. If you have your business open and it's still running, you need to pay them. The best way to pay them is don't let them default. I've done whole episodes on this, doing with SBA loans, how to avoid default. But again, as long as you still have your business open, your best terms you're going to get, and they do have hardship statuses there at the SBA. If you have questions about it, how to do that, give us a call, and we can go over your options with you, 520-485-7371. I've done a whole show just on the SBA loan issue. But getting people that got SBA loans that were too large, and now that they have to make those repayments, is what's killing a lot of businesses out there. And it's hurting a lot of businesses if they can't afford it. It's what's shutting businesses down. Now, again, if you get the forgiveness, not the forgiveness program, but the hardship program with the SBA, you can pay as little as 10% of your original balance. But you have to apply for it, you have to qualify for it, and you have to redo that every 6 to 12 months to stay in that hardship status with the SBA. Now, when you set that up, it doesn't forgive it. You still have the debt there, but again, you still retain the favorable rates of 30%, 7%, or 30%, or 30 years to pay off the balance, and then around 3 to 4% interest, whatever interest rate you got. It's still very, very low compared to anything else you're going to get in the economy today. Now, the problems come in is people just can't afford to pay it. If you can't afford to pay it, and again, this is why you have to have a plan, why you have to have an idea. If you take out these kinds of loans, you have to have some kind of plan on how to repay them. You can't just take out loans and just think that when the loan comes due, and they get this, it helped many businesses in the short term to pull it off when they had to pay for it, but too many businesses did not plan for when the bill came due, and now they have to pay $1,000 a month, $2,500 a month. I mean, I've seen much higher numbers depending on the amount that was taken out. And a lot of people are saying, look, we can't do this. Let's close out these businesses and walk away. And all of that money, government money, is gone, which is why we're going to see a lot more damage coming out of SBA loans and ERC debt. A lot of these businesses are just going to get shut down. When they got ERC money, then the government comes after them if they can't afford it. It's just going to close businesses down. It's an additional burden, short-term gain, long-term loss, which is, that's how our government operates. It's very short-sighted. So again, I just want to take a moment and talk about the danger of taking on too much loans. It kills businesses if you can't handle it. If you don't have the growth, and a lot of people expected the growth, it's tough. There are some businesses thriving out there, but most businesses, many are struggling. Individuals are struggling. So you have to prepare for downturns. And I can't tell you how many people took a shellacking in the market in 21, 22, and all they want to do was hold on till the stock market improved. The stock market, after in the last month, and I haven't mentioned this, but it took another dive. Why? All the poor indicators in the market and the economy. So long-term planning is really what you need. And I'm gonna go ahead and share the article. And the reason why you need long-term planning is because there's so much to talk about. So let me go ahead and going back to irs.gov, National Small Business Week. Still, there's so much information here. We talked about starting a business. We talked about business structures and how to deal with this. And we didn't talk about all the debts. We kind of got into that. But this really gets into, once you have it set up, and you have it set up properly with the IRS and state, operating a business. And so, again, to operate this business, first of all, you have to have an EIN if you're paying any kind of business taxes. So why would you want an EIN? A lot of people run it as a sole prop. So when things go bad, you're protected. So last night, I was on the phone with the IRS, and the gentleman didn't really know what he was doing. I could tell pretty quickly he didn't know what he was doing, but he's being a bit obnoxious on the phone too, which is interesting. So I had a case where the business closed down in 2017. It's been closed for years, almost 7 years now. And the IRS went and audited and assessed all kinds of business debt. There's plenty of debt under the EIN, under the business. but the business is closed down. It doesn't have any assets, hasn't had any assets since 2017. So the tax that are under the EIN can only be pursued under the EIN. So when talking to this gentleman, he's like, well, you can't close down the business until you pay the taxes. I'm like, are you? That's what he told me. And I said, well, that's not right. And I demanded his manager, and he hung up on me. I know I'm right. And they can want all they want. They can demand payment all they want, but they can't levy under his social security number. The only thing that can be transferred to his social security number is payroll liabilities. Now, there are payroll liabilities in this case, but you have to go through a process to do that. And to do that, you have to have a revenue officer sign. And so, again, we're requesting to close out the business. He didn't know what he was doing. And so I'll have to go back and try again to close out the business. But when you have that EIN, it gives you that protection. And when the business closes, a lot of that tax debt just goes away. It goes away as a defunct business. This is why we encourage, it helps people open up businesses, take risks. We want people to take risks. Because that's what drives the economy, is small business growth. So if you have an EIN and the tax that is under that EIN, it adds a layer of protection for you. Now, there are other ways to add more layers of protection, such as using trust planning, etc. But as far as you're doing that good record keeping, trust planning with an estate attorney and succession planning, you absolutely should be doing that. And that will provide added layers of protection when things go wrong or things change or you decide to just do something else. It can really help you and your company, you and your family, to have that layer of protection of having an EIN. A good record keeping is absolutely crucial. So again, in these cases that I talked about, going down to tax evasion, the IRS is alleging this and that. They've charged them. Doesn't mean they're guilty, but the IRS is pretty thorough in their investigations before they file charges. Actually, usually very thorough. Doesn't mean they're right, though. And if they have good record keeping, they can contest it. And they can say, look, this is what I provided. Here's the information. When the IRS comes knocking, having good record keeping is absolutely crucial to standing up for your rights. And we are coming up on another break. And then we're going to really dive into businesses with employees, because that is a huge issue. There's so many issues here. We're going to have more than enough material for the whole week to talk about this and really dive into this. So stay tuned, and we'll be right back after the break. Welcome back, everybody. We're still just kind of diving into some of the things here for operating your business. So here are steps to make a name change if you need to. Businesses with employees. This is a huge section right here. The difference between independent contractor or employee. Now, you've got to be you see all the links here: employee benefits, family help, employment taxes. So paying yourself, record time keeping. This is something you need to spend a lot of time. I could spend weeks talking about all these different issues. So part of it is even paying yourself and doing it correctly. So let's talk about that for a sole prop. And I've talked about this as far as the self-employment tax. So the IRS has a funky system that makes it work that people that run a business get taxed effectively at the same rate as if they were employed by someone else. But you get to pay the full amount, which is 14.9% of Social Security Medicare. And I talked about this the other day. Half of it's paid by the employer, half it's paid by the employee. Now, how that's supposed to be paid, this goes into your required estimated tax payments. So ideally, you pay yourself a wage. and that has to be a reasonable wage for your industry. And then you can take, depending on your formation, you can pay yourself through taking draws, etc. But the record keeping is absolutely crucial because that's what determines what your income is going to be. Not just what you take from the business under W-2, but the net profit of the business as well gets added to your tax return. Now, classifying people. So if it's yourself, just make sure you're paying yourself correctly. Make sure you're tracking that and you're paying estimated taxes on it throughout the year. Because again, 8% is now the penalty on top of all the other penalties for not paying estimated tax payments through the year. And the first estimated tax payment was due on April 15th. Next one is due June 15th after only 2 months. And then goes to September 15th and then January 15th. So you've got to be on top of that. You've got to be paying your taxes throughout the year. Hiring employees. This whole thing of independent contractor or versus employee. The IRS, the Biden administration has come out, and many states are doing this too. Many blue, or even here in Arizona, we have a Democrat governor, and she's replaced a lot of these rules where they're going after people and arguing for a much stricter standard to pay someone as an independent contractor. If you have someone that just works for you and they don't work for anybody else, they are more likely or not going to be deemed an employee. The problem is if you pay someone a 1099 as an independent contractor, first of all, you have to pay the 1099s, issue them to count as a business expense. And you have to track who you're hiring and using, so the IRS can see what kind of expenses that you're paying out. If it's an employee, if you mislabel someone as an independent contractor, you can get in trouble not only with the IRS but with the state as well. And like I said, the new standard for independent contractors is that they essentially have to have their own business, and they have to be working for multiple companies where it's like, they come, they do your plumbing, or yes, they handle your IT, but they have their own business and they have multiple individuals. If you have someone that works for you, but also moonlights with other companies, it's not established, again, that can absolutely burn you. And I've seen it hurt businesses. And ironically, when they had to reclassify all their independent contractors or as employees, a lot of them left. Which, the government forced him to do that, and then a lot of his employees left. So again, it's really nuts out there, depending on what kind of industry you have. Don't assume that what others are doing is legal. These rules are changing, and again, when someone complains, this is how most of these audits happen: is someone complains, they apply for unemployment, they ask for aid from the government, and the government looks at their situation and say, well, hey, you haven't been paying in to the system. Should you have been doing that the whole time? And then they don't go after the employee, they go after their employer. So just some considerations: hiring employees, part-time seasonal help, benefits, family help, employment taxes. This is where a lot of people get messed up, the 940, 941s. Again, one of the biggest issues that hit companies, and it's one of the few areas that will follow you personally. Excise taxes are another thing that can follow you personally, because whenever you have sales taxes, anytime where you actually collect the money from your customers and then don't send those funds to the state, they treat it very differently. And most states will follow the owners personally for sales taxes. So again, employment taxes, sales taxes, those don't just go away. And it talks about a bunch of different issues, married couples, how do you handle that, members of the clergy. If you are in a relationship, you're in a married couple, make sure this is done right. Because when relationships fail, if you don't plan for the future and eventualities, someone almost always gets hurt when things fall apart. And again, that's one thing I see people burned all the time for this. So again, there's so much to cover here, um, and my main goal here is just to highlight things for small business owners when this happens. My wife works with me in the business. How do we structure it so if I pass away or we get divorced, I'm not hurt, she's not hurt. We have a plan moving forward. So I could continue to just go on and on this. Um, there's forms and associated taxes. One of the big things here is helping your employees know about tax compliance. This is huge because if you're paying your employees a 1099, and there's plenty of positions that are still 1099 out there, if they don't understand how to manage their taxes, how to go about it, they get hurt all the time. That's where people get hurt the most. And if people are under withholding, it can not only hurt your employees, but it can also affect the business when they get levied, when their wages get garnished. A lot of people will quit a job just because their wages are garnished, and they'll go find another job and wait for the IRS to catch up with them there, or they'll just do something else. So educating your employees about tax compliance, I think this is huge. It's a huge benefit to your employees to help them avoid tax issues, to help them have peace of mind, and any good business owner would want their employees to be happy as well, and again, help them have resources. So this I think is huge. There's plenty of employees, that have plenty of issues here. So just helpful links. This is kind of general information. What if? But especially if you have bonuses, if you have independent contractors, it can absolutely help them to have kind of a tax strategy for them and refer them on to, hey, here's these professionals that I'm familiar with. If you guys need help, here it is. Paying independent contractors how to do this correctly and avoid issues. And then for your own business cash, what is taxable and non-taxable income? So this is money you mainly receive. Pretty much everything for the business is taxable. There are forms of non-taxable income. The biggest misnomer here is people think Social Security is not taxable. It absolutely is taxable. So when kind of going through this prepaid income, employee compensation, child care, babysitting, fringe benefits, there are plenty of ways to offer benefits through your company and help help your employees understand. So again, virtual currencies, absolutely taxable. So even bartering, the IRS wants to tax bartering services, but that's much harder for them to do. And it goes through what you have to be worried about, how it needs to be addressed. And again, if you think you're avoiding taxes, you're avoiding the issues, you're probably not. You're probably just doing it wrong. One of the main things, disability, especially veterans disability, is non-taxable income. But if you just have a pension, government pension, from your service, that is taxable income. So it depends on the form, and they have to be specific carve-outs for it to not be taxable. Filing and paying your business taxes. So again, this is where we talked about the different forms. How do you file? There's electronic options for your, if you're large enough, it will be required that you do EFTPS, that you get set up and you make all those filings and payments online, because the payments are required often enough. If you're large enough, it can be required every time you run payroll. So again, this is very important information to have. And you know what? I think I'm going to just go ahead and stop here because there's so much information here. We're going to come back, and I was hoping to tomorrow get to how to close out a business without incurring tax issues with the IRS. But we might have to still focus on business payments and how to go through this without owing and how to avoid these issues when you're running a business. So again, we're running out of time here. So take some time, look at this. We didn't even get through this whole list. There's quite a few. When it gets down to closing a business, it's a whole nother day. And again, it goes to retirement. There's quite a few issues here still left to cover. And these are all very important for small business owners. Main takeaways: get informed, have good record keeping, and when you have employees, this is where most companies run afoul of tax issues. So not only do you need to have a good bookkeeper, you need to have someone that you can trust handling your payroll. And just because, this is something I really need to hammer on, just because you're using a large company, ADP, Paychecks, etc., there's some are better than others, but you need to verify. You need to be aware of what's happening. I can't tell you how many times, even with a smaller payroll processing company or solo, just a solo tax preparer that handles bookkeeping and payroll, make sure it's being done correctly. I've had to help plenty of businesses, plenty of individuals that they thought the payroll was being paid. They thought everything was on top of it. Something happened, things didn't get processed, and they started getting letters. Usually by the time you're getting IRS letters, there's already a problem. So that's when you need to find out what's going on and get these fixed, because it can absolutely affect your ongoing issues, your operation of your business. Sometimes it's just a small installment agreement or getting compliant, getting missing returns filed. Sometimes the debt can be in the hundreds of thousands of dollars. I've dealt with cases like that, $600,000, $700,000, where the business owners didn't even know there was a problem. One particular case is around $360,000, and we got the full amount refunded, but it took about 2.5 years. We had to deal with the revenue officer. We had to stop all the collection activity. We set them on a payment plan. And while they were going through this, $93,000 was paid in the payment plan. And then the whole thing, when the debt was erased and reversed, they got the $93,000 back, which was a huge, nice check to get. Nice shot in the arm for them. But making sure you're protected, making sure your company is allowed to proceed. That's really what brings us a lot of satisfaction here. It's one of our big whys as to why we enjoy doing what we're doing, is saving the livelihoods of hardworking small business owners, taxpayers that are going out and trying something, putting themselves out there, trying to run a corporation or run a small business. It's tough. And even if it's a medium size to large size, it's tough. There's so much out there. Get the expert advice you need. That's my main takeaway. And if you can always get a second opinion. I had someone call me the other day, in case the call was referred to me, and they had a CPA that messed up their case. And we were able to refer them on, give them some good advice and refer them on. And they said, "Oh, I'm sorry I bothered you as an attorney." I said, "No, that's fine." That's how we bill ourselves, is that if we don't have the answer, we know who does, and we can refer you on to connect you to who's best going to serve you. And that's the kind of service you need. That people that are just going to try to hire you on as a client, but they'll take care of you and your business for you and your family. Again, if you have any questions, call us at 520-485-7371. But it should be about you and your family and making sure that you have peace of mind moving forward. Thank you for watching again, and we will see you tomorrow.